Okay, so something huge is happening behind the scenes in corporate finance, and it is all about Solana. We're talking about Wall Street, and they aren't just dipping a toe in the water. They are planning a multi-billion-dollar cannonball. Let's get right into it.
Remember this number, $2.5 billion, and that's just the start. This is the amount of fresh capital that major firms are raising right now with one single goal, to buy Solana and stick it right on their balance sheets. Make no mistake, this is not an experiment. This is a tidal wave of institutional money.
So, who exactly is making this massive bet on Solana? Well, we're talking about some of the absolute biggest names in the crypto space. And this isn't random. It's a coordinated, super strategic move into holding Solana.
I mean, just look at the players here. You've got a powerhouse group with Galaxy, Jump, and Multicoin teaming up to raise $1 billion. Then you have Pantera Capital going for even more. And it's not just the usual crypto funds. We're seeing companies like BitMining, a former Bitcoin miner, jumping in. This tells you it's not just one firm taking a shot. This is a real coordinated trend.
But this massive wave of cash didn't just appear out of thin air. Nope. It's actually building on a foundation that was laid by a few trailblazing public companies. They were the ones who got into the Solana treasury game early and basically proved the concept.
And here's what that groundwork looks like. You have companies like Upexi and DeFi Dev who had already stacked hundreds of millions of dollars worth of Solana. They showed everyone how it's done. You buy SOL, you put it on the balance sheet, and you use it as a productive asset. And it's that success, that proof, that is giving these bigger Wall Street players the green light to dive in now.
Which brings us to the most important question in all of this. Why Solana, right? Why not just keep buying Bitcoin, which was the original corporate crypto play? Well, the answer comes down to a huge shift in thinking, from just passively holding an asset to actively making money with it.
See, it really boils down to this difference. The whole Bitcoin strategy, which MicroStrategy made famous, was treating it like digital gold. You buy it, you hold it, and you hope the price goes up. That's it. The Solana strategy is a totally different ballgame. It's about owning an asset that also kicks off a consistent recurring income stream for the company, all thanks to staking.
And we're not talking about chump change here. We're talking about an average annual yield of 7 to 8%, paid out in more SOL. For any chief financial officer, earning a yield like that on a reserve asset is an absolute game changer. It literally transforms a company's treasury from a boring cost center into an active profit center.
Okay, so the big money is piling in. We get it. But what does that actually mean for you, for the average investor, and for the Solana market itself? This is where it gets really, really interesting.
It all comes down to simple supply and demand. See, when these companies scoop up millions and millions of SOL, they aren't just day trading it. They're locking it up for the long haul to stake it. They are effectively pulling those tokens right out of the circulating supply. So as billions of dollars of institutional money lock up more and more SOL, you could see a major supply squeeze, which could put some serious upward pressure on the price.
Now let's be super clear. This is not a risk-free strategy, not by a long shot. Chasing high yield with an asset this volatile, well, it comes with some serious headaches that these corporate treasurers have to think about very, very carefully.
The number one risk, of course, is just the wild price swings. A big drop in Solana's price can absolutely wreck a company's balance sheet. Then you've got the question marks around regulation. How are governments going to treat staking rewards? You also have to consider the network's past outages. And then there's the simple fact that trying to sell a massive position in a bear market without tanking the price is, well, it's really, really hard. These are major hurdles.
So all of this leads us to one massive forward-looking question. We've watched the corporate playbook evolve from Bitcoin as just a store of value, and now we're seeing Solana emerge as a yield-generating powerhouse. With billions of dollars pouring in, is this it? Is Solana becoming the new corporate crypto standard? That's the multi-billion-dollar question Wall Street is betting on right now.